Bullion.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason with Independent Living Bullion, and it is my sincere privilege to be joined now by Gerald Celente, the publisher of the renowned TrendsJournal. Mr. Celente is a frequent and highly sought-after guest on news programs throughout the world and has been predicting many of the biggest and most important trends before they happen for more than 30 years now, and it's a real honor to get a chance to speak to him today. Mr. Celente, thank you very much for joining us.
My pleasure, Mike. Thanks for having me.
Well, I know your time is very valuable, and I want to jump right into it here. And to start off, last week we saw the Fed do another $10 billion tapering of QE, just as you'd been predicting they would for the past few months. Give us your thoughts, if you would, on the recent Fed moves and what we're going to see now that Janet Yellen is taking over as Fed chair, and also what effect this will likely have on the equities market.
Well, look what happened when the Fed announced it back in June of 2013. You saw the world equity markets go into panic because the only thing that's keeping the equity markets going are all this cheap money that the Fed and other central banks have been pumping into the system. So where did the money flow to? Well, a lot of it flowed to the emerging markets. So now we're seeing in late December of 2013, when the Fed announced its first round of tapering, you saw the immediate effect. It wasn't a happy new year for the equity markets, not only in the U.S. and the emerging markets, but in Asia and the European markets. They're depending on cheap dough. So now when the Fed announced it the second time, you already saw it leading up to it, the world equity markets started diving down again. So they cannot sustain it without getting more cheap dough. So look what's going on with Turkey, with what other one? India, with South Africa, with the ruble. You look at one currency after another, you're seeing the governments are doing everything they can, the central banks, which are the same thing, they're raising interest rates. Okay, let me get this straight. They're raising interest rates at a time when the economies are slowing down. Well, you can see what the result is going to be, and they're raising interest rates because of all of that hot money, because of the Fed stimulus that flowed into these emerging markets on the carry trade. Now it's flowing out, and their currencies are crashing. You're looking at the Turkish lira at all-time lows. You're looking at the rupee, the Indian rupee. You know, they said it would never go this low, and it keeps going lower. So they're raising interest rates. So you can see that the panic is hitting the streets. Because here's the deal. As I said, the only reason why there was any so-called recovery after the panic of '08, and I wrote when it happened, this is no recovery, it's a cover-up, they're covering it up with cheap money, is because of the cheap dough. Now, and low interest rates. Now you're going to see interest rates going up. They're already going up around the world. When interest rates go up, the economy goes down, period, paragraph. So, what do they do next? You mentioned about the new Fed chairperson, Yellen. They're going to come up with another scheme. They won't call it stimulus. Maybe they'll call it Yellenomics. Or make up some other stupid name. Quantitative easing, you know. Give me a break. Quantitative easing. Buying up a lot of worthless crap and building a deficit in the Fed at the point of over $2 trillion. The same thing's going on in China. Look what's going on over there. Interest rates are going up. Their economy's going down. The only reason there was a so-called recovery in China, they just called it something else. But instead of the money going into the equity markets over there and making the 1% even richer, in China what they did was they built the infrastructure. But they also built a building boom. So now you're seeing the unwinding happen. So again, we believe that they're going to come up, the ECB, the Chinese, the Fed, they're going to come up with another scheme to juice the economy. When they do that, that's when you're going to see gold and silver prices take off, particularly gold. And, you know, with me, I may call it a bias. I try to be, you know, as even thinking as I can, but my I have more of a bias toward gold. My first buy of gold was 187.50 an ounce back in the late 70s, and I was there. I bought at the peak, at the highest point of the trading day in July 20th. January 20th, 1980. So, I went through that as well. This is very different times now. You're seeing purchasing of physical gold that did not exist back in the 80s. So that's the way we see it playing out. Again, you're seeing, last week you saw it with the Fed tapering, and you saw the reactions on the global markets. They're going to cover it up. There's a lot of methodologies they have to make it look better, whether it's the Fed's purchasing, the plunge protection, all of these other little deals they have. It's a scam. The game is rigged. Everybody knows it. That's not a theory. It's a fact. They rigged the LIBOR rates. They rigged the Forex. We know it's a fact. So they're going to rig the markets to make it seem as though it's not as bad as it is.
One thing I like about your publication, with all that said, is the fact that you just don't pull any punches at all and don't shy away from giving an honest outlook on the state of the world, as simply too many people seem to have their heads in the sand. And this is important stuff for everyone to be aware of. Now, we've got obviously very precarious situations with our economic and monetary systems these days, as you mentioned and talk about in your publication. But when things do fall apart, talk about your guns, gold, and getaway plan motto and how important that's going to be.
Well, as I've also written, when all else fails, they take you to war. I mean, this is as old as history. People are now making the comparison that I made in 2013, Top Trends of 2013, that they were taking us to, that war was building on the horizon. Look what's going on around the world. I mean, how much more proof do people need? Civil war in Syria, civil war in Libya. You have a civil war in Bahrain that never makes the news because the Fifth Fleet is there. You have a civil war in Yemen, and the administration keeps sending drones there. There are civil wars going on throughout Africa, Central Africa, the Sudans, the Somalia. You have really populist movements, which are really civil wars going on throughout Europe. The Pitchfork movement in Italy, in Greece, in Spain, in Portugal, that aren't making the news. You have people that haven't left the streets in Thailand going on for 2 months. You have protests going on continually in Cambodia, in Bangladesh against the governments, one after another. Oh, then you have the unraveling, as I was mentioning, in the emerging markets. Look what's going on down in Argentina. The people taking to the streets. The peso is diving. People are taking to the streets in Brazil. So, as I said, when all else fails, they take you to war. And I remember what happened in 9/11. I lived in colonial Kingston from New York City, an hour and 45 minutes north. And I'm a New Yorker, in case you couldn't tell by the accent, So I know the area pretty well. They're telling us that planes are coming down the Hudson River. And I know the Hudson River really well, and there's the Indian Point nuclear power plant 45 miles north of Ground Zero. I said to myself, if they whack this thing, you're going to see chaos that the world has never seen before. And that's when I came up with GC's 3Gs, guns, gold, and a getaway plan. I got my gold. In those days, I was stupid enough to keep it in a safety deposit box, which now I have it off-site in a place that nobody will find it. And I had my gun, because if people are going berserk, and if there's a nuclear attack of that kind, you have to protect yourself. And a getaway plan. I'm 4.5 hours south of Canada. In those days, back in 2001, they didn't have the Gestapo, Homeland Security. What a disgrace with this crap, Homeland Security, NSA. It's a fascist takeover. So anyway, I was ready to bolt over the border. That was the next thing I did was I called up right after the woman I was going out with, a French woman, Marie-Pierre. I told her, get all your money out of the bank. And she had her money in the Key Bank in Red Hook, New York. And they wouldn't give it to her. And they started, making fun of her because she was French and saying once again, the French weren't supporting the United States. She had trouble getting her money out, but her being Marie Pierre and being French, she got it done. I had my money in certificates of deposit with Fleet Bank, which no longer exists. And I wanted my CDs cashed out. And the guy went and cut me off. I was giving him the money transfer information. And he said to me, Wall Street is closed. Certificates of deposit of financial instruments. You'll be able to get your money back out when Wall Street reopens. That was my lesson. If you don't have your money with you, you don't have it. It ain't yours. And then I got screwed by John the Slime Corzine, the former head of the Goldman Sachs gang, former governor and senator in New Jersey, who was head of MF Global. And they stole the money out of my segregated account. I lost a lot of that money as well, a good portion of it. I got most of it back, but lost some. Finally. So the story is this. If you don't have your money and you don't have a plan, you have nothing. If you prepare for the worst and nothing happens, what have you lost? Nothing. If you don't prepare for the worst and something happens, you lose everything. People lost it in Cyprus. You can see they're already, again, I've been writing about this for years in the TrendsJournal. It's old news. Oh, HSBC has limits on how much money it can pull out, and so did the Chase Manhattan Bank. J.P. Morgan Chase, when they pulled it off this summer, putting limits on how much you could withdraw. And they said, oh, that's only for new accounts, and they made up a story. You're seeing it unraveling in front of our eyes. So be prepared. What do you have to lose? Nothing. Again, you have everything to lose if you don't prepare.
In terms of the gold and silver markets, obviously you follow those sectors very closely. And now we've come off of a couple of really rough years for metals investors. What do you expect to see here in 2014 and beyond for gold and silver?
As I said, they're going to come out with another stimulus scheme because the tapering is not going to work. The markets need low interest rates and plenty of cheap cash. They're going to come up with another, call it Yellonomics or whatever you want to call it, whatever they call it. When they do that, you're going to see gold prices and silver to follow skyrocket, particularly gold. And I think gold is in store. Again, its timing is tough, but the best that we can see, there's going to be panic on the street before the end of the second quarter. That was our forecast for the end of December of 2013, that by the end of the second quarter of 2014, you're going to see some kind of panic. And we hold by that. So when that happens, gold becomes a play. Again, you're looking at physical demand. You're looking at the mints not stopping printing in Australia and other countries. There's very strong physical demand. And we see it very positive for gold in the long run. Again, I'm not I used to trade gold back in the late 70s. And again, I got blown out of the market in 1980, so I know what it feels like. So I've been buying for possession since that time. That's the only way I buy. I buy it for my golden years, not as a trade. And you put it away, and you don't think about it. And again, as you know, it's a fact. I call the beginning of the gold bull run, in our TrendsJournal in December of 2002 or 2001. I forgot. It's on our website, TrendsJournal.com, when gold was trading at 275. Again, the only way that they could sustain this is by throwing in cheap money. And I'm not. By the way, I don't go with the inflation issue. I just go to currency devaluation. The result is the same. Inflation often happens because of supply and demand. When there's a lot of demand, and people are willing to pay more for the product, the price of the product goes up. This is more like a Zimbabwean dollar. The price of coffee hasn't gone up. It still costs the same amount to buy a pound, but your currency is worth less. And that's what I see, a currency crisis. A currency crisis will be driving gold prices, I believe, not inflation threats. Again, it's the same. The result is the same. It's going to cost you more to buy something. And that's the issue, whether it comes through a devaluation of the currency or a typical economics 101 supply and demand.